Nvidia is about to report, so let's ask the question, are we in a bubble? Let's talk about it on the weekly update. Okay friends, let's talk about Nvidia earnings and bubble risk. Here's what you need to know. First up, Nvidia reports today after the bell amidst some spooky rumors of an AI bubble. So we're going to talk about the AI bubble rumors today. But first, let's look at the market same way we've always been looking at it. Red is the S&P 500, orange is the 50-day moving average, purple is the 200-day moving average. And what do you notice? Well, this unstoppable rise, this unstoppable rally that we've had basically all year since the turn in Liberation Day, we finally, mercifully, are getting our first test on the 50-day moving average. And this, to me, looks like extremely healthy action. You know, I've been begging for a correction. I've been begging for consolidation for quite some time. I am not afraid when the market likes to give and get and give and get. Where I start to get worried is when the market just moves in one direction. That's when things can get a little fragile and when things can get painful. So I welcome this test of the 50-day. Now, my phone has been ringing a reasonable amount and certainly a lot of inbound texts and emails about this issue. Hey, what's going on? Are things okay? What do you think about the market? All that sort of stuff is happening right now. I think this is extremely normal, natural. We are only a couple percent off of the all-time high. A 50-day test is normal. They happen very often in bull markets. Here was 1, 2, 3 of them in 2024. We've had none of them since Liberation Day. We're overdue for a little test. I like that we're getting it. And what's happening is the news flow, it's kind of interesting. The news flow is fine. Earnings season has been good. But what has been generating this 50-day test that we find ourselves in right now has been some rumors and some fears around an AI bubble. So I wanted to talk about that for a second here. You've probably seen some version of this chart by now. I've been texted it enough from clients that everybody sort of knows this circular round-tripping thing that's happening inside the AI space. Basically, the AI models, XAI, Figure, OpenAI, are giving their money to Nvidia. Nvidia makes a tremendous margin on that. Nvidia is then taking that margin and all that money that they're making from these graphics cards and reinvesting into Intel and CoreWeave and OpenAI and AMD. And all of these people, these investments allow them to then buy more chips from Nvidia. And so this has the appearances of something unusual. It seems like there's a little bit of a money cheat code going on here. It's the same dollars, just kind of passing through multiple different hands. And this has everybody worried and asking me the question, is this a bubble? And I've taken a look at this and I've thought about it and spent a lot of time sort of ruminating. Does this look like a bubble to me? No. This looks like circular finance to me, which is something that we want to be careful of because, this can be very pro-cyclical. So when the money's running, it's going to run really well. And when the money dries up, it's going to hurt even more. But this doesn't look like a bubble to me. And I will give you my perspective as someone who lived through '08 and one other investment bubble since then. My definition for a bubble is very specific. When the economy gets deformed in some way, when there's so much capital chasing an idea that it dents the economy in an unproductive way, and then all of a sudden we have all sorts of rot that comes into the economy and dead branches fall off the tree, that is my test for a bubble. So in 2007, the first bubble that I lived through, you can think about, houses that were built that sat empty. You can think about developments that were made that didn't get finished. We were building all sorts of homes. You can think about a mortgage market that was oversized to allow, people to have multiple millions in dollars in mortgages that should never have even had a first mortgage, let alone second, third, fourth, or fifth. You can think about that bubble. That was a true bubble. And what happened is the economy deformed in the direction of building homes, financing homes, speculating on homes, etc. That was a real bubble. And when that bubble burst, we had to go through that painful process. All the homes that were built with nobody in mind had to work through the system. All the jobs in the banking and finance sector had to go away because the finance and banking sector was much larger than what we needed to be. So that's the test for the bubble. And we've seen one more. It was a much smaller one, but we've seen this in crypto. If you'll remember, it was not that long ago that NYU and a couple of other universities were offering majors in blockchain science or developing with blockchains, et cetera. And that was maybe like a 2017, 2019-ish phenomenon. And if you think about where we are today in 2025, I don't know what you do with a degree like that. Right? And so that wasn't a big bubble. It didn't take the whole economy with it, but it gives you some sense of what asset prices can do and deform the rest of the economy. So we've got the housing bubble in 07, 08. We've got a crypto bubble, a much smaller one, but it gives you sort of a sense of, what can go on there. The pictures, the monkey pictures and all the rest of that, the stuff that was sold for millions of dollars. And so does this AI thing look like a bubble to me? No. Up until this point, this bubble, if we're going to call it that, has mostly been financed by free cash flow from the hyperscalers. And the hyperscalers, the Magnificent Seven stocks, they've had more cash on their balance sheet than what they've needed. So is it an investment boom? Absolutely. Is the size of this thing pretty massive? Yes. Is there going to be a return on investment for all of this stuff? I think so. I think it's going to come from a unique place, but is it a bubble? I don't think so. And so this creates an interesting sort of setup where the market is coming down because we've got fears of this bubble. I don't see the economic deformation that's happening here yet. It mostly just looks like investment from the largest, most profitable companies in the world, and that's okay. So I think we're going to be spared the worst. If this thing flames out, I think we'll be okay. And it all comes to a head today with Nvidia. This is a much more technical chart than I ever like to show you guys, but this just gives you the setup of Nvidia going into earnings. This red line is its 50-day moving average. You can see we're basically sitting right on it at this point. So Nvidia earnings are coming at this pivotal moment. What do I think? I think Nvidia earnings are going to be fine. The hyperscalers have already told us that they're buying plenty of Nvidia's products. Does that mean that the stock is going to keep going up and behaving how it's been behaving for the last 2 years? Well, I don't know about that one. That's a much bigger ask. The only way that the stock price behaves in a positive fashion is if there's still that speculation, that buying pressure that comes in. Whether we get that or not, who knows? But what does this all mean, Nvidia earnings and bubble risk? Well, Nvidia reports earnings tonight, and the entire AI complex is holding its breath to see what they say. Speculation has been rampant about a nascent AI bubble, so an AI bubble just starting to get, building here. I believe that Nvidia, this is my take, Nvidia will report fine earnings, and I don't believe the AI ecosystem is in a bubble yet. We would need to see the economy start to deform. We would need to see, malinvestment start to happen. And I don't think we're there yet. For the most part, it's just Magnificent Seven companies spending their cash flow or spending their gigantic piles of cash on their balance sheet. And don't you want them to do that? Because cash is just cash, right? It's not growing. It's not, taking advantage of new markets. So it's actually healthy for them to say, hey, we think we're going to get a return of investment here. Interest rates are coming down. Why don't we deploy this cash now? So it seems very normal to me. The market is doing fine and looks normal. Speculation has been rewarded all year long, and it's healthy for it to take a breather. And what I really think people are worried about here, there are stocks that are up 70, 80, 90, 100, 200, 300, 700% this year, and those stocks are getting hurt pretty bad. Many of them are down 30 to 50% from their all-time highs in roughly a month. That is normal. That is when you buy a speculative stock, that is what you're exposing yourself to. Even today, as drawn down as those stocks are, you still have a great return from the start of the year. So I think it's really healthy. I enjoy that the market is having a consolidation here. I think it's completely normal. I don't think anything bad is happening in the market. And I think it's really good that speculation is being so punished right now. That's one of the ways we don't have a bubble. A bubble would be if all this stuff just kept on going and then all of a sudden everyone gets pulled into all these speculative stuff. So I like that the market is taking a breather here, and I've waited quite a while to see it. So there you go. That's the news review. Nvidia earnings and bubble risk. I'll see you next week for the markets review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.